More Eurozone talks in Brussels, but there is a little less tension, it seems, in the air this week. Greece's bond buyback plan lifts sentiment, helping stocks, the euro and peripheral debt head higher. But with no deal in sight on banking union, the party may not last. Let's get to Jeremy Stretch, head of FX strategy, CIBC. Jeremy, what is supporting the euro right now, and how long do you think it's going to go?
Well, I think some of those things you've just mentioned are integral. I think the Greek debt buyback story yesterday provided some initial impetus. I think we've seen short covering over the course of the last week or so helping to rally the euro as well. But I think there is a question mark as to how much further we can go. We've got that ECB meeting on Thursday where we get the ECB staff forecast revised down for growth. I think that will cause some concern. I think there is still some questioning as to how successful that Greek debt buyback may well prove to be. And as you've just mentioned, the inability to close out any concerns on the Euro banking supervision story, I think also continue to add headwinds for the euro's performance. So I think up towards 131 is an increasingly tough nut to crack.
Let's throw in there as well the inability of the political parties in the US to get their act together on this fiscal cliff. My question is what this actually in the long run does to the dollar, whether it's harmful or whether it's supportive because it's a global problem and everything's going to rush into the dollar.
Well, I think we end up with the assumption, and our base case assumption at CIBC is that we do get some kind of pragmatism eventually winning out within the US political system. However, it will be a case of probably relatively close to the deadline. So I think we will see these oscillations in sentiment between now and the end of the year as the politicians look rather more entrenched in their positions currently. But I suspect, as I say, the pragmatists will eventually win out. And then I think that should provide some residual support for the dollar, largely on the basis that as we go into 2013, the underlying fundamentals, I think, will become increasingly important. So we'll move away from just the pure binary risk-on, risk-off trades and perhaps focus a little bit more on the economic fundamentals, and the relative performance of the US will look substantially better than we continue to see in the Eurozone, where even with Germany trying to hold up the Eurozone, it's going to be another struggle for the next year. So
you want to be long dollars next year, as CIBC's called?
That, I think, is certainly the state of play, I think, for the majority of the year. It may not be a case to look at purely on a year-on-year basis. Maybe as we get towards the back end of next year, if we go through the German election, we start to see some degree of resolution beyond that in terms of some of the political and structural risks within the Eurozone, then I think perhaps 2014 could provide a slightly better tone for the euro, and maybe the dollar's resilience will start to wane. But I think certainly through the first 3 quarters of next year, the dollar should hold up pretty well.
Can you shed some light on this sterling resilience in light of these, let's face it, pretty awful construction data story out today? What's supporting cable?
Well, it's very much the case that construction PMI has been weak, and certainly has been weak for 3 of the last 4 months. So the previous month did bounce back above 50, so we've gone back below that. Now, of course, you can argue that construction is a relatively small component of the UK scenario, but nevertheless, the BRC numbers weren't exactly barn-busting overnight either. But I think it is the case that the broader dollar negativity that we're seeing at the moment as that fiscal cliff story continues to, at least in the short term, be a dollar drag, is providing some support for sterling. I think if we do see a further improvement or a sustainability in equity performance, then I think that will also hold sterling up at this particular point. I think key will be the services PMI tomorrow. That may well be a key watershed, and unless we get a very strong number there, then I think the early November highs in cable will probably be not seen, and it may well be worth fading some of these rallies.
Is Osborne's message tomorrow going to play into this at all?
I think it is going to be significant. I don't think there's going to be too much pre-Christmas cheer that Mr. Osborne can spray around for sterling sentiment. Growth numbers are not going to be encouraging, neither is the deficit backdrop. And if there is talk of additional austerity over the longer term, then that could well further weigh on consumer expectations and consumer sentiment. And of course, that remains one of the main driving forces in terms of UK PLC.
Jeremy, many thanks.
Thank you.
2 stories to keep an eye on today in Deal Zone. Russian billionaire Roman Abramovich paying around $2 billion to acquire 7% of Norilsk Nickel from Rusal. The move is aimed at ending a 4-year power struggle between the 2 biggest shareholders in the Arctic miner. Loss-making Rusal also looking to pay down more than $10 billion in debt. And Dexia may have found a buyer for its asset management arm. The Franco-Belgian group reportedly in talks with Hong Kong investment fund GCS Capital over a €500 million deal. A deal would mark the near total dismemberment of Dexia, which had to be bailed out by its home government back in 2008. That is all from us for now, but join Reuters every day at this time to take the pulse of the market. I'm Axel Threlfall. This is Reuters.